Our sponsor PropTechs are absolutely at the forefront of delivering all of those great listing enhancements that you may have seen on other real estate portals. Things like interactive property staging, real-time renovation estimates, neighborhood analytics, seamless furniture shopping in the listings. Basically, all of that cool stuff that you might have seen us talk about on this podcast and on online marketplaces. If you want to know more, head to proptex with 2x's.com or hit the guys up on LinkedIn and obviously say that we sent you. Hello and welcome to the PPW pod, bringing you news, views, and interviews from the world of real estate marketplaces. Joined for today's news episode by Simon Baker. How are you, Simon?
I'm fighting fit and awake. I tell you what, actually, this conference is keeping me up late at night. There are so many good speakers, and trying to put together an agenda that really excels is proving to be a little challenging because we've got so much good stuff. So the quick prompt at the top of the hour about the conference is, if you haven't registered, we have actually a limited number of about 50 tickets left. I'm not joking. So come to ppweurope25.com and grab one of those last tickets.
Very good. Well, shoehorned in to the beginning of the episode. Harvey, how are you?
Yeah, very good, Ed. And come along to the PPW conference in Madrid, October 15th, 17th, with Startup Day on the 14th.
And you can meet Harvey and Ed in person.
We did it. We did it. 2 ads in 1 minute.
All right. That's enough about that. We have quite a packed news episode today. After we put out last week's news episode, quite a lot of big things have come in. We'll start with certainly the biggest surprise and probably the biggest piece of news we've covered for a little while. Harvey, why don't you tell us who Fotocasa and Habitaclia's fourth owner in 2 years is?
Yeah, so if you've been living under a rock, ladies and gentlemen, Scout24 is going international. So not only do they operate Scout in Germany and Austria, but they are now entering the Spanish market with a 153 million euro purchase of Fotocasa and Habitaclia. Who are they buying it from? Well, that's where it starts getting a little bit more interesting, because we don't know whether they're owned by Adevinta. We don't know whether they're owned by EQT. It's all over the shop, this one, but it seems like this is going to be a final transaction involving Fotocasa and Habitaclia for the next couple of years. Really interesting, this one. Seeing a market leader in Germany also entering the Spanish market is going to be fun, and I can't imagine what it's been like in the boardroom at Adevinta and EQT in the background. But yeah, this is a fun one, Ed.
Yeah, thank you. So to clarify what we're talking about here with 4 owners in 2 years, this is probably the one real estate portal around the world that has been passed from owner to owner more than any other over the last, period of time. Back as early as October 2023, Habitaclia and Fotocasa were owned just by Adevinta, the Norway-based classifieds operator. Then in November 2023, it was, the whole of Adevinta was taken on by Permira and Blackstone, private equity company. Then in July this year, EQT, another private equity company, bought Adevinta's Spanish assets from Permira and Blackstone, and they have now sold, the real estate assets of those Spanish assets, so Fotocasa and Habitaclia, on to Scout24. Simon, a few months ago, you and I were speculating as to who, we were doing some specific speculation. We were saying that Immobiliare.it, you thought was going to take over Fotocasa and Habitaclia because they also own Pisos.com in Spain. Were you surprised to see that ultimately Scout24 came in here?
Okay, so this has got a bit of unpacking to do in all of this. The short answer is yes, but let's unpack a bit. First of all, EQT doesn't actually own Adevinta Spain yet, but they've sold it. So let's unpack this. EQT purchased Adevinta Spain, but that deal doesn't actually close until the first quarter of next year. But to get the deal, my understanding is to get the deal closed, they had to sell Fotocasa and Habitaclia because they own, was it 15%, 18% of Idealista. Now, on the rough maths of what we've seen, 18% of Idealista is probably worth materially more than 100% of Fotocasa. They sold 100% for 153 million euros, I think it was, and 18%.
Correct.
And so unless you believe that Idealista is worth $1 billion only, then you've got a problem. But they did the transaction in 2024, and it was worth $3 billion. So 18% of $3 billion is clearly a lot more than the value of Fotocasa. So clearly they're going to always have to sell Fotocasa because no Spanish competitive authority is going to allow you to own 18% of one and 100% of the other. That does not make sense. So given all of that, it had to be sold. Now we know on the grapevine that Immobiliare was surprised that EQT purchased it in the first place. Okay, because they recently bought Pisos, so they've gone, okay, I'm going to make a material play in the Spanish market, probably driven by the fact that Idealista is the major competitor they've got in the Italian market. So the two, like, well, if you're going to play in my playground, I want to go play in your playground. Now, so what was surprising is having lost the not picking up Adevinta Spain, or in this case, Fotocasa, when EQT bought it, and it was always going to have to be sold by EQT. I'm surprised that it wasn't Immobiliare that bought it, because that would have then consolidated their position as the clear number two, with Daylight's third in the Spanish market. It would have been Idealista and then the Immobiliare group in Spain. But now that's a three-way battle. And what makes it more challenging and a lot more interesting, and a lot more column inches will come out of this, is you've got a serious player in Scout24 owning now the number two player, which means it's going to be harder for the number three, Pisos and Indomio, to compete, because while Fotocasa's been moved from one owner to another, it has to be distracting on management. Right now, Tony Blamey, the CEO there, has had I think he's had three masters, or in literally the year he's been in charge. He's got to spend a lot of time talking to explaining what the business does, preparing another business plan, and so on. And in that case,
on our podcast.
Yes, exactly. So I think now that it's going to be a very interesting battle in the Spanish market, and clearly Scout24 is not entering it just for fun. Okay. Now you have to remember, for Scout24, Scout24 is worth about I think it was 8 billion euros. So it's
8.7.
8.7. Thank you. It's not like a bet the house type deal. 160 million on an 8 million. So what's that? 2% of your market cap has gone into this deal. So they're serious for sure, but it's not bet the house in the process. So all of this is fun. It's going to give us a hell of a lot more to talk about over the coming years, and it's going to have a lot of fun and games that are occurring. And the other So I think let's see what happens.
Yeah, I want to, before we get into the next question that I have, Harvey, can you give us a quick breakdown of Idealistas? So the main competitor, the market leader here, their ownership has passed around quite a lot over the last few years as well. So we've got on the show notes all of the different shareholders of Idealista over the years, and then I want Harvey to read that out, and then I'm going to ask Simon a question.
Okay, thank you for the honor, Ed. One minor thing. 8.27 billion, not 8.72 billion for Scout24. Just to clarify. Right then,
what's
Idealista's ownership.
Friends?
2015 bought by Apex Partners. 2020, EQT becomes a majority shareholder at a valuation of 1.3 billion euros. In January 21 to June 24, Apax buys a minority stake along with Oakley Capital. And then in June 2024, Cinven becomes a majority shareholder in a deal valuing Idealista at 2.9. And as Ed mentioned before, EQT remains a minor shareholder.
Yeah, thanks. So we have just named in this segment, I don't know, at least half a dozen private equity companies here.
Yeah.
My
Well, let's think about it. Well, let's have a crack, right? Because this is a bit of fun. You got Apax, you got Oakley, you got EQT, you got Cinven, you've got Permira, you've got
Blackstone.
Blackstone. That's 6
Yeah.
at the process at the moment.
So I was trying to think about this. I was, as you do, talking to my mother the other day about work. And I wasn't talking about this specifically, but it kind of flashed through my head, like how do you explain some of the things that you write about to your mother? And I was trying to think, well, how would I talk about this to somebody who's no fool, but knows almost nothing about business? How and why are we talking about a fourth change of ownership for this company that's doing, it's doing fine. We think it's profitable, right? Why would they need 4 owners in 2 years? Like, what is the explanation you would give to somebody who's not in the industry, who maybe doesn't fully grasp what's going on here?
Okay, so we look at something like an Idealista. Well, if I'm Apax, right, and I invested in.
No, I mean specifically Fotocasa. Fotocasa's been passed around.
Okay,
4
Fotocasa
times
are
in 2
different.
years.
I think there are two separate things, two separate conversations. One, Idealista. Idealista is a large vehicle, very valuable. Apax enters 150 million. It sells down its stake. It still had a little stake in it when it sold to 80% to EQT, but it did 8 times its money. Right, so for every euro it invested, it got €8 back. Now EQT sold down in 2024, so in 4 years it basically doubled its money from 1.3 billion to 2.9 billion. So that's sort of what's happening there, right? So Cinven's coming in at 2.9 billion, saying, well, that's got to go to 10. That's the bet I'm placing. Now, other case, Adevinta, right, was the owner of Fotocasa, as well as many other assets throughout Europe and many different types of assets, from real estate to cars to jobs and so on. And it was an operating owner rather than just a pure investing owner. It was a listed company, but it operated, right? Because it was trying to centralize technology, trying to drive out efficiencies rather than just being the owner and allowing it to operate independently. That got to a point where things sort of didn't work as well as it could have. And we've seen that in other businesses as well around the world. When they try to centralize technology, everything focuses internally. It becomes a bit of a mess and things don't progress externally, as in revenue growth and so on. So then private equity comes in and goes, you know what, I'm going to buy Adevinta because it's not run efficiently or effectively. So that's when Permira and Blackstone or BlackRock or one of those guys came in, bought it, took it off the market, so delisted it. And then they've gone, right, well, what are the assets I've got here? Oh, distilled. We don't need that. We'll sell that quite quickly. So they sold that in a heartbeat, primarily back to a group run by the Fallon brothers, who were the original founders. And then they've gone through all the various assets they've got. And they've clearly said, Spain, we don't really need that. I think we can sell that off. And I'd rather get a good return on that. So I don't know how they've valued each of the individual assets. Clearly no one does. But they've said, well, within that Spain group, we've found EQT as a willing purchaser. Now, EQT's gone, well, I really love the coaches business, the cars, but I don't really care about the real estate business because I like number ones. Remember, they've invested in the number one in Idealista, the number one in Property Guru, and so on. Right? They like to have the number ones. I mean, clearly, Fotocasa is not number one. So then they've said, and the numbers I was hearing on my back channels were that they basically, even though they spent, I think it was about $2 billion to buy all of Adevinta Spain, they basically put majority of the value on the cars business. Okay, and they had valued sort of around 200 million the Fotocasa business. So they're always going to be looking to go, well, just as Permira and Blackstone have gone, you know what, I'll buy Adevinta. I don't really want to steal it. I don't really want Adevinta Spain. I'm very interested in Kleine Zeiten or whatever other assets I've got. They're the big bets I'm placing. I just need to get rid of the ones that I don't need. So they got rid of Adevinta Spain. Now EQT is doing the same process. I don't want the distraction of a number two. I'll on-sell that. Well, who wants to buy that? Well, we've got a great relationship with Scout24, although so they got a good deal, 750 odd. Yeah, we'll take that.
Okay,
So
thank you. On
it's
the
just
off
like
chance, on the very
being
off
at the
chance
pub
that
and
my
doing
mum
deals.
asked me about this deal, I'll send her that clip. That's perfect.
Yep.
Ed,
We'll-
before we move on,
Hi, Ed's mum, by the way.
before we move on, hello, Mrs. Keith. Before we move on, Simon, when Scout24 gets the phone call, are they having to pay slightly over the odds to EQT for being a middleman, or is EQT sort of saying, we need to make a 1%, 2% profit to make this worth our time, or are they saying we'll just hold it for 3 months, 6 months, and then hand it straight on to you? I'm just trying to work out how the finances and the deal aspect. Well, exactly.
Okay,
that's why I'm asking.
First of all, Scout24 doesn't actually own the asset yet. Scout24 has bought it from EQT, but EQT doesn't actually own it yet. EQT is still waiting for the whole process to finish. So what will happen is in the first quarter of next year, EQT will become the formal owner of Adevinta Spain. And then simultaneously that Fotocasa will then get the ownership. The shares will then get sent off to Scout24.
But specifically valuing the asset, I'm just trying to work out how much of a margin there's going to be involved, or do you just say we'll just pay this and we'll take the exact same amount back, for example?
My totally factless hypothesis is that EQT wanted a quick deal because they didn't want to have to deal with a regulator in Spain and having to answer the question, you own 18% of the number one and you now own 100% of the number two. Explain that, please, sir. All right. And explain why that's not a conflict of interest and market, from your personal perspective, a market dominant position. So they probably wanted a quick deal and they probably put feelers out very quickly, or people have, put one and one together because it's not really that hard and have come to them. And my hypothesis is that they probably had 2 or 3 people come to them, or they spoke to 2 or 3 people. And my guess is that Scout24 made a very good offer. I think the offer there's 153 million. There's about 11 million in EBITDA. So you're talking around about 12, 13 times. 13 times, I think, is the maths. 13 to 14, sorry. EBITDA in that process. So it was, and that's a good price. And they would have just said, yeah, let's just do this, get it done. Because we don't want to spend a lot of time arguing. Because whether I receive 153, 160, or maybe even 170, when I've just spent 2 billion, it's pretty much a rounding error. And by the way, I'm not spending 2 billion to make 2 billion and let's say 10 million, 2.01 or even 2.1 million, 2.1 billion. Too many bloody billions and millions here, right? Okay, it's just so small the difference in price they would have got that they would have just wanted to get the deal done. Then they can go back to the regulator and say, well, we're not going to own Fotocasa. Scout24 is. We're just holding it while the transaction's done. And I heard that the reason they had to buy the whole lot was the tax structuring issue. So they buy out of into Spain. We've on-sold this one. Thank you very much. We've covered everything. Mr. Regulator, you should be happy because I'm only going to have my 18% in Idealista.
Okay, well, we'll move on. We've got a lot to cover, but I'm sure we'll hear a lot more about this. Probably Harvey and I are quite happy that it was Scout24 in the end because they're a public company and we will get to see the numbers behind Fotocasa. We'll move on.
That's why you saw exactly what they paid, the multiples they paid for it and so on.
Yeah.
It was super transparent and was very insightful.
Yeah. We will move on to a bet noir of Simon's. We're going to talk about iBuying for a minute because there's quite I'm going to call it a fun story about iBuying. Harvey, why don't you fill us in?
Yeah, so it looks like we sort of have the birth of Opendoor 2.0. We've
I'd
had
say
some
this is
big
3 or 4.0 at this
Well,
point, isn't
maybe
it?
3 or 4.0. So maybe 3 at this point, actually. So we've had a whole bunch of management changes in the last few months. Carrie Wheeler left to be replaced by, I think it was the CPTO or no, COO of Shopify, Kaz Nejatian. Interestingly, the founders of the business, Eric Wu and Keith Rabois, I'm not sure how to pronounce it, have come in on the board of directors, and it looks like we're starting to shape up a new look company. But interestingly, one of the new members of the board, Raboy, however you pronounce it, has basically said we need to cut our staff significantly. And we're not just talking about 10% or 20% of the workforce here. He has suggested that Opendoor might shed 85% of its workforce in the next few months because I don't know what any of them do, is basically what he said on the record. So we have a company that's going to go very much towards tech and product, I think. We watched with interest a pretty fiery podcast interview with Kaz yesterday, me and Ed, and he was quite an outspoken CEO, I think it's fair to say.
We're trying
character.
one way of putting it, yeah.
Yeah, very.
I don't know if we have show notes, we should put a link to that YouTube
Yeah, no,
video.
we'll give them their due. So the name of the podcast that he was talking to was
VC20 with Harry
20.
Stebbings, I think it's
That's the
called.
one, right.
VC20.
I wanted to talk about this because it's the absolute, we do a lot of corporate interviews on this podcast and just in general. We read a lot of them. We hear a lot of them. This is comfortably the craziest one I've ever listened to. This was, by the way, all credit to, well, I won't name them. One of our listeners put me onto this, and this listener and I were texting back and forth, just being like, this is the craziest interview I've ever heard. So I'm going to read out some of the quotes in this interview that the new CEO, who, by the way, I think he'd been in the job for a day at this point. He's doing this interview.
24 hours and 12 minutes, he said.
If anybody has ever watched the HBO series Silicon Valley, this is straight out of it. It's like the guy's a comedy character. If we can make buying, selling, and owning a home easier, ... less terrible, the world will be a better place, and we will figure out how to make money along the way. He then wrote back on that about 2 minutes later. Another quote: "I am nobody's idea of a good manager." Buddy, you've just been made CEO. You better be a good manager. It was a crazy interview, and I wanted to bring it up. I mean, just for to flag it for people to watch. And this is how not to do a corporate interview. But also, I want to talk to Simon a bit about this because for me, there's a real juxtaposition of real estate companies that we are used to, the people we talk to, the kind of sober business kind of interviews that we get of companies that have DNA that I would, in the Venn diagram, they're kind of, sensible and business-like and real estate. And then you've got Silicon Valley companies who are, at least to my mind, head in the clouds. We'll make the world a better place. We're going to take big shots. It's just, they're so different. These two companies, the DNA is so different. Have you ever dealt with one of these Silicon Valley type big shot companies?
Yeah.
And what is your impression?
Yeah. Look, there's substance and form. Okay. And the reality is I deal with a lot of people around the world, and there are those who there's two dimensions you got to think about. How noisy they are on one dimension. They're super quiet. They don't say a lot. They're very thoughtful through to the, oh my God, if they're underwater, they'd still be talking, right? And then you have on the other dimension is whether they deliver value or they don't deliver value. Okay. And there seems to be a line that goes from high noise, but not always a lot of value delivered, down to the quiet ones who deliver a lot of value, right? There seems to be some sort of bit of a correlation in that path, right? There's a line that goes down there. Okay. And I think it's because often when you have someone who's very noisy, the expectations they're setting are so high that they can never live up to them. All right. And if you've been in the job for 24 hours and 12 minutes or whatever the number was, and I don't think he came out of Spotify, or what was the company he came out of?
Shopify.
Shopify.
Sorry. Shopify. You haven't even come out of the real estate industry, and you're basically saying, things online as well. If we could make it easier, the world would be a better place. I mean, what bloody rubbish, right? I mean, that is fundamentally a rubbish statement. Now, what he's doing is he's just saying, "Hey, everyone, I know, buy our stock, buy our stock, buy our stock. We're going to be a great company." And I think there's a long, long gap between the words and how hard it is to take something what Opendoor is really doing and to make a real business. And I'm just having a look here. I pulled up the share price, because if you like all these markets always love to get through all the noise to the meat and potatoes, right? If you go back to where have I pulled up the share price here back? I don't know, maybe it'd be great if I had a date here. 2021, we have your $30 share price. Okay. And then the share price basically tumbled all the way down to the dollars, $1, maybe even a bit less, sub $1, $1 to $2 for most of the last 2 years. So no wonder they fired the previous CEO. Now, then they've come in, and then over the last month, the share price rocketed up from basically $3 or $4 to $10 again. But in the last 5 days, it's down 20%, because the markets have these sort of knee-jerk reactions. Now, if I was walking into Opendoor and I wanted to actually give comfort, I'd say, right, we've got a business here that's doing X amount of revenues. We're doing this. We're losing this amount of money. And they're losing a lot of money, and have, I think, since day one, lost a lot of money. But they've still got a $6 billion market cap. We're going to do the following. Clearly, cost reduction has to be done. We have to do whatever we're doing. We've got to do it smarter and do it at a lower cost. And we have to have inbuilt unit economics that have a margin built into them. All of this sort of language gives comfort and confidence to investors that is a safe pair of hands. But if I was an investor and I was watching that podcast with the new CEO and how he was talking about the industry, and honestly, the guy was out there, right? He's out. I'd cover everyone. I mean, the expression. No, I was listening to him and I'm going, it's almost like you've been given a brand new toy at Christmas and you're so excited that you can't help yourself and you're just going a million miles an hour, but you don't know how to play with the toy yet. And I think the reality, if I was a betting person, I'm saying this share price, which is currently at $8.38, it's saying here or something like that, is on its way back down to $2 or $3, right?
Simon,
because
I
can't see what they can really do.
For the sake of argument, could I put forward a bit more of a bull case and let's see how this plays out? Because we've got two co-founders now in the boardroom, so they're advising, they're helping shape the direction. We've got someone who's helped scale a really good business in Shopify, very tech and software focused, shall we say.
But a very different business.
Very different business, but we've got
SaaS business. It's a SaaS business.
But we've got some real estate in industry experience in the boardroom, and now we're going to completely let me finish, and then we're going to decimate our workforce, and we're going to focus on building product and value-added services, and we're not going to buy as many houses, but we're going to enter the homeowner experience for life. That was sort of what he was trying to put out in the thing. So we're going to have long relationships with homeowners, and we're going to sort of make Opendoor the go-to place for all homeowners looking for value-added services. Yes, we can do the buying and selling our home, but we're also going to help connect your Wi-Fi and whatever it is at the end afterwards. I just want to put it on the record that that's sort of what he wants to go for. I just want to know what your feedback is to that bull case, if any.
I think that you're stretching a hell of a long way to create a valid, robust, and scalable business model out of that. Opendoor clearly has a brand that equals sell my house for cash. They will buy it. They're an iBuyer. They can then make it pretty, whatever they do to it, and then sell it again, right? I haven't checked the unit economics because I gave up on the iBuyer model about 3 years ago, right? I just don't see the model. So then you go, great. Well, what we're going to do is become where it's a home switching type business, or a long-term home maintenance. But how much money is there in that? I'm just thinking, you're going to service everyone from Miami through to Alaska, right? You got a massive country. You've got lots and lots of different providers across the country. What are you going to sell? You're going to sell Wi-Fi? Okay. You're going to sell insurance? You're going to sell gardening? I mean, you're getting either you're super, super local, or you're up against people who are already large and already have large built infrastructures, or people already have a relationship. Okay. So I've got a feeling that you're in a bit of a hiding to nothing. And I'm not convinced that people who own homes want relationships with other people for life. I think they want a relationship with someone to get a job done. So, yeah, a gardener's great, but you can find gardeners anywhere, and they're the ones who come every week and tidy up your garden. Do I want a relationship with an agent? No, because I'm going to buy and sell once every 7 to 10 years. So I probably, when I come to sell, I've forgotten who I bought through anyway in that process. Banks, there's, I have a house in the US, and the letterbox is filled perpetually with offers from Progressive to Citibank to Capital One to people I've never heard of, got no relationships with. So how are you going to get cut through on all of that? I think it's just too hard in the process, and you're going to do this in an environment where you're going to cut out thousands of jobs because you've got to get to profitability, and you want to change your business model simultaneously. I'm not convinced. And yes, you can have some very smart people around a board table, but boards meet once a month. They're not involved every single day running the business. So it's the CEO is the one who's really got to embrace and understand very clearly where the value is and what value can be released in this process. I'm just not convinced that it's going to end up anywhere.
Put it this way: we look forward to their next set of financials, Ed.
Yeah, we'll move on. Speaking of financials, we've spoken about iBuyers for too long. for what we're calling a dead business model, we've spoken about them too long. We'll move on. Harvey, why don't you tell us about Zoopla's 2024?
Yeah, of course. So Zoopla is a private company, but that doesn't mean they get to keep all their numbers under wraps. And they have made their filings for the year, and revenue is down 7% at Zoopla for the year. It's a pre-tax profit has actually turned into a small loss of £6 million for 2024. Agent numbers steady, but not a massive growth and no huge advantage over on the market. I mean, as always, the comms out of Zoopla are always good, always pretty positive, but it's a bit of a shame that the numbers don't quite back up the comments about the likes of My Home and things like that. We've got, I think the loss came from some kind of, they sold a business or they bought a business, something along those lines, Ed.
It was a write-down of an asset they bought in 2021. A platform for housing developers called Yorkies, which
that's the one.
Write down. So operationally, I think the margin was pretty much the same as it was in 2023. Why I wanted to talk about this is this was quite an interesting one in terms of like how we got the news. So like Harvey says, Zoopla is not a public company, but UK companies, certain UK companies do have to disclose their numbers. Zoopla is one of them. And I saw this. I think it was the Times reported on Zoopla's numbers, so I went and checked to see if their numbers had been released to Companies House, and they hadn't. So I was thinking, well, where did the Times get this from? So I emailed Zoopla, and Zoopla emailed back saying, "Oh, we have a new comms agency who have a press release for you," which they've never had an external comms people before, and they've never had press releases about their numbers, especially not numbers that are, let's be honest, negative. Now, the rumors have been doing the rounds that Zoopla is for sale, that Silver Lake, the American private equity firm that bought Zoopla for $2.2 billion back in 2018, wants to sell. And this is just setting my alarm bells like, oh, okay, this is new. This is something that I wasn't expecting. Simon, what do you think Zoopla will be doing this time next year? Do you think they will be owned by Silver Lake, or do you think somebody will have come in and bought them?
I wouldn't be surprised if another PE firm had bought them. So let's sort of have a think here, right? So back in 2018, so what's that? 7 years ago, Silver Lake spent £2.2 billion on
Was it
buying
pounds or dollars? I genuinely can't remember.
pounds. I just
Right.
checked. Pounds, buying the business. Today, Rightmove is worth 7.5 billion, more or less, pounds. Okay. Now, rough. Now, I love Perplexity. I just ask it a question. Right? Roughly. What is the revenue of Rightmove versus Zoopla? Okay, and it comes back and says, well, the revenue of Rightmove in 2024 was nearly 400 million, and the revenue of Zoopla was about 80-something million. This is
84.2.
84.2. Thank you very much. And revenue was up 8 to 10% is expected to be up 8 to 10%. Sorry, for Rightmove, and revenue was down 7% for Zoopla for the 23 to 24 period. So what you've got are two businesses that are going like this, right? In different directions. Now, if I'm Silver Lake and I originally invested, I would be hopefully exiting now after 7 years for 5 billion plus, right? I would have wanted to have a very good return on my money. How am I going to get much back for my business as a number two player? So we know that what was the revenues of Fotocasa? Do you remember what that number was? That was disclosed.
I don't have it to hand.
It was in the press release.
Yeah.
Right. But whatever that revenue multiple is that Scout24 paid would probably be a good indicator of what the market's going to value a Zoopla at the moment. And my hypothesis is that it's probably 25 million they paid. What's 6 times? So the market's probably valuing Zoopla at 500 million pounds.
That's
maybe
what's been quoted by, I think it was Sky News in the UK that said, I don't know which sources they were quoting, but 500 million is the figure that I've seen.
Okay, well, I hadn't heard that. Good guess. So I think you've got this problem where you've got on the market coming up, CoStar backed, aggressive marketing, a whole bunch of stuff. Eventually, I assume they're going to change the name to homes.co.uk. If what was mentioned at last year's PPW conference by Andy Florence.
Talking of CoStar, Simon, why have we not seen CoStar firstly buy Fotocasa? They like buying these number twos and turning them into number ones, as they've done with they're trying to do with Domain. Why? I've not seen any speculation that CoStar is going to buy Zoopla, which, at least to my very uneducated mind, makes perfect sense. If you want to take on Rightmove, Zoopla's available at a limited price. Why not do that deal?
My hypothesis, without any additional information, would be that you're given a choice: spend 500 million to buy a business. That's if you could get it for 500. Okay. Million pounds, or invest 500 million pounds and grow the market share. And they're probably betting that they can invest the money and grow without having to buy whatever's in Zoopla. And Zoopla is clearly there's Zoopla and all the other businesses that are in that group, would be my hypothesis.
But if tomorrow, let's say Scout24, just for argument's sake, Scout24 comes and buys Zoopla, and suddenly you've got this serious operator who does really great stuff, where it's market leader in Germany, buying Zoopla, you've missed your opportunity, right?
Yes. There also might be questions about maybe the competition commission goes out. It's too hard, too much of market consolidation,
Yeah.
having only
Yeah.
two players. I don't know. I'm not on it. I'm sure they've looked at it or are looking at it. They would be doing it. And in terms of them buying Fotocasa, my hypothesis is that my guess is that Scout 24 was just fast, right? And
Yeah.
EQT didn't, as I said before, I don't think EQT wanted to spend a lot of time arguing about whether they get 153 or 160 or 165. For them, it is irrelevant as long as they've moved the asset on. So I think the challenge is that for Silver Lake is, what do? You know you're going to have to sell the asset, and the problem is, as soon as you sell it, then you have to write it off. You have to recognize the loss. Okay, at the moment it's just a book loss. It's just, well, this asset's not doing as well as we thought, and that's part of it. But as soon as you actually sell it, you then recognize it. Now, the other thing is, if it's one of their funds, the fund may have a life attached to it, right? Where they've got to start to wind down the fund. And if they've got to wind down the fund, they're going to have to eventually sell it anyway. I don't know. I've not looked that closely around it. But suffice to say, not good news.
Yeah, I don't want like ending it on not good news for Zoopla. They have always been very good with us. We will say this: Zoopla have just started to turn on monetization on their seller lead product. They've got what they constantly say, and I do believe is a very good thing going in their My Home product. They've got, what was it, 4.8 million people tracking their homes, good potential seller leads. They've
Excellent
just turned
product.
on the monetization. We hope that when they put their accounts in this time next year, everything will have ticked up for them.
Yeah,
We'll,
I
we'll move
think.
on.
And
And
actually, I just want to have one other comment,
yeah, go
right?
on.
And because Paul Whitehead's coming to the conference, and looking forward to seeing him and the team, and Rich Hayes is presenting, and I'm looking forward to hearing how they're approaching it. So I think as long as they focus on where the money is, they should be in an okay position out of this. All right, it's just
Yeah,
about focusing on the high quality products that are going to deliver results. And the other thing is, don't get caught up in the market speculation. Right?
yeah,
It makes no sense. And the good news is they're not doing what Opendoor's doing, where the guy's going out there saying, "I'm going to change the world." And by the
yeah.
way, because I don't think anyone, I don't think that would help anyone.
Yeah, speaking of speculation, or actually in this case, kind of a comparative lack of speculation, Harvey, why don't you update us on the latest real estate portal operator to go public?
Yeah, thanks, Ed. So, Swiss Marketplace Group quietly went public last week. It sort of came out of nowhere, actually. We only had any rumblings about a week or two before it happened, and that was only because one of their investors mentioned it as a passing comment in their interim report, I believe. So, Swiss Marketplace Group, what is Swiss Marketplace Group? It's a collection of a lot of marketplace assets, primarily in Switzerland. So, we have the market leader, Homegate, very good real estate marketplace. We've got several real estate marketplaces. I count 5 on the list. We've also got 4 automotive marketplace businesses. We've got 3 horizontals, and we've also got a smattering of things like data intelligence and CRMs. So we have a new public company at a valuation of circa 4.7 billion Swiss francs, which is about 5.9 USD billion, or 5 billion euros. That's the basics of Swiss Marketplace Group, Ed. I'll hand it back over to you.
Yeah, thanks. So, not too much to say with this, apart from congratulations to Swiss Marketplace Group. I read somewhere that it is the largest flotation in Europe this year, which is, congratulations to them. There was comparatively little speculation, fanfare, etc., etc. I'm yet to read the prospectus. I don't know if one was put out, but yeah, they seem to have done it quite, without too much fanfare and fuss and all the things that talking to you over the years, Simon, make it seem like going public is a complete pain in the bum.
It is a complete pain in the bum. But they've clearly done a great job. I was just reading then a bit more about it. Shares are up 7% the first day, which is always good to have if you've listed a company. Is, you're not going for, the problem is if you have 100% day on day growth, then you've clearly underpriced it. And if you've had a good 7%, that means there's this good demand and follow up support. So, well done to the guys there. And clearly it's covering, more than just real estate is the point. So, they've got a whole bunch of fantastic assets. Real estate, cars, general marketplaces, finance and insurance. They've done a very good job in one market of putting together a whole bunch of very good assets. So well done. And what else can we
Yeah,
say? But
yeah, absolutely.
that.
We'll move on. Well done to Swiss Marketplace Group. Lastly, guys, it's the Z word. People just keep throwing lawsuits at Zillow, and we keep having to cover them. This one is. Well, I'll let Harvey tell you about this latest Zillow lawsuit.
Yeah, this one's a bit of a headache to get your head around. So apologies, ladies and gentlemen. Zillow is on the receiving end of its third major lawsuit in about as many months. This time we have a private individual, name of Alucard Taylor, who is unhappy with the Zillow Flex product. Now, there's a whole lot of details around this that I don't really want to go in for the sake of a news roundup. I really do recommend reading the article that we've put up on online marketplaces. Of course, it's free to read. But the point is that agents using Zillow Flex might have to pay up to 40% of the money that they earn on a deal closed from a Flex lead back to Zillow. And the problem is that the agent will then have to inflate their own personal fees and their own commissions to the consumer in order to make as much money as they would have had if they hadn't given 40% to Zillow. So now we have a case where hidden...
Hang on. Before you say any other word, just say the word allegedly so we don't get sued.
Allegedly.
Thank you.
So we're now in a position where home buyers are perhaps being charged extra fees, allegedly hidden fees, because of structures that they have no idea exist. Now, is Zillow Flex a scam? Allegedly, we don't know. Is it breaking the law, the Real Estate Settlement Procedures Act, RESPA? Allegedly, we don't know. And plaintiffs are seeking $1 billion of damages for this one. This is dating back to 2021. They want a jury trial. They want Zillow on the rack, and they want Zillow to pay back a whole bunch of fees that home buyers have had to pay agents because the agents inflated their fees because they were using Zillow Flex. There's a lot in this one, Ed. So let's hand over.
I first of all, I was listening to a really interesting podcast the other day while on my bike having a bit of a ride, and it was all about and it was a Chinese American gentleman who'd written a book, and he said, China is is managed by engineers. That the government is primarily engineers, and America is primarily run by lawyers. Okay. And he said, if you sort of think about it, there's a strong bias towards just building things. Now, clearly that has a bunch of costs attached to it. But then there's in China, but in the US, there's a lot of litigation everywhere. Lawyers everywhere. Everything is designed to almost like stop everything happening rather than make things happen. And to me, this is another case of when you have a very litigious society and someone is not happy, the first, second, and third recourse in action is to sue someone. Okay, I'm going to sue you because I don't like X, whatever X is. And here we have a case where, so I'm listening to this and going, well, how if I sign an agreement with you, Harvey, to sell my house and it's 6%, I pay 6%. Whatever you spend of that to get the deal done, how's that inflating the cost to me?
All right? Yeah, so I actually, after putting this on the docket, I read just before we went on that according to some legal experts quoted by, I believe it was Housing Wire, this case doesn't have legs legally.
No, it does. It
Well,
just it. Does
what's
it pass?
interesting about it is this is Zillow's kind of new flagship way of doing business, where they charge a percentage of the agent's commission as opposed to pay per performance, pay for lead, whatever, right? And
Yep.
it's it even if this lawsuit is a long shot, if it wins, it will completely capsize Zillow's business. Zillow has, since 2019, they said, this is the way we're going to go everywhere. We're going to do this flex model. And we've got they started doing these enhanced markets where they only work with this model and they're moving to
Correct.
only
Yeah.
doing this model. So even if it's a long shot, even if it's a let's say it's a 1 in 10, if this, this goes somewhere, they are in potentially quite big trouble because they've gambled the business on doing things this
Yeah.
way.
Yeah. Well, first of all, they've got to make a profit, right? I mean, Zillow's been around a very long time and hasn't really made a lot of profit. It's certainly not in the same world as like a Rightmove or a REA Group or any of these other major players who are churning a 40 or 50% EBITDA margin. So you've got to do something different if you want to get the outcome. So they've got to try it right now to create a product that generates leads, and you basically are paying a percentage of your commission for those leads rather than a flat fee. Okay, which is fundamentally my understanding of it. What's wrong with that? Okay. I mean, I get to choose whether I want the lead or not. My job is the middleman. I got on a contract with you, Ed, to sell your house. My job is to sell your house. If I've got to pay half my commission to someone to get the house sold, then that's my choice.
Okay.
Unless I've got another way of doing it.
Let's make this.
That's the only place on the planet I can get a lead, which is not the case. Because they're all part of the MLS.
Let's just for a minute, let's try and make this a bit more relevant for people out there listening in places that are not America, do not have this ridiculous litigious culture. Let's say you are in charge of real estate portal X in some European country.
Mm-hmm.
To what extent, how much of your time is taken up thinking about legal matters like this? Like, how familiar do you have to be with the laws? How much can you just delegate, and how much is it like, a priority? Because I'm imagining that I'm sat where Jeremy Waxman, CEO of Zillow, is sat, and he must just be, I don't know, 25-30% of his time is thinking about lawsuits, probably.
Yeah. I think
What is it elsewhere? And how important is it to know, the basics, what you might be liable for?
Oh, you got to have some general awareness. A lot of it will, in Europe, a lot of it's about GDPR stuff, about data, human, the information you collect about people and so on, and managing of that in a very secure, tight way to ensure that if anyone tries to hack into your systems, no one's personal data is out and about. But these sort of things, when you don't have when you're in societies that aren't just, the first step is litigation, then most of this stuff doesn't occur. I mean, I think the most of the things that you're worried about if you're in Europe, for example, are HR issues. If I want to terminate someone, what's the cost of doing it? What's the law say? I'm in France, I've got like 1,000 procedures I've got to go through, or I'm in Germany, whatever, or I've got to deal with a works council. There's a range of other stuff that in the US they don't, right? It's at-will employment. Sorry, Ed, you're fired. Thanks very much. Here's your 2 weeks. Goodbye.
Glad I'm in Spain.
In Spain, I can't get rid of you. Right? Not saying I want to.
He's been trying for ages, ladies and gentlemen.
You can, but it'll cost you.
It costs me. So I think you have different issues you got to think about, and you probably don't think a lot about them because you probably have a very good relationship with your workforce. You probably got a very good relationship with your customer base, okay? Because you're providing a service that they can go to someone else and use. You're not dealing in an MLS environment. It's probably and there's certainly nowhere near as much litigation. And as long as you got lawyers worrying about GDPR and all that sort of stuff. But no, I think it's just a different world.
Okay. Ladies and gentlemen, I'd love to be able to tell you that we won't talk about any more Zillow legal proceedings, but people just keep suing Zillow, and we keep having to report on it. That's all from us. Thank you for listening. If you listened all the way through the Zillow legal proceedings, thank you for listening all this way.
Fair play. Congratulations.
One more last shout. If you haven't got tickets for Property Portal Watch yet, I believe Simon is putting the price up tomorrow.
Tomorrow prices go up
So
because I got 50 tickets left.
actually, by the time this comes out, the prices might have gone up. So this
Yes,
might
but I'll tell you what, if you're still listening now, send me an email. That's simon@onlinemarketplaces.com and I'll send you a discount code.
There you go. Can't say fairer than that. Simon, Harvey, thank you very much for your time, and we'll see you on the next one.
Our pleasure. Goodbye.
Bye-bye.